Most XRP investors are watching the price. But what if the biggest signal isn't coming from the charts at all? What if the XRP ledger itself has been quietly revealing clues before major price moves happen? A new research paper has uncovered something fascinating. Instead of focusing on technical indicators or market sentiment, researchers studied the XRP transaction network itself and found patterns that appeared before some of the biggest XRP price surges in history. And if these patterns continue to work, what they're showing right now could become extremely important. You're watching XRP Update, and today we're breaking down a research model that suggests XRP's own network activity may provide early warning signs before major market moves. More importantly, we'll look at why some investors believe the next big shift could happen much faster than most people expect. Here's where things get interesting. The research paper is called Anomaly Prediction and XRP Price with Topological Features. Now, the title alone sounds complicated enough to require a PhD to understand, but the core idea is actually pretty simple. The researchers wanted to find out whether activity on the XRP ledger could help predict unusual price movements before they happen. In other words, instead of looking only at candlestick charts, indicators, or market headlines, they looked directly at the structure of XRP transactions flowing through the network. And what they discovered was something that caught a lot of attention. According to the paper, specific changes inside XRP's transaction network often appeared before extreme price surges. The researchers concluded that these network patterns provided valuable information that could improve the prediction of unusual XRP price behavior. Now, that's not a guarantee of future prices, it's not a crystal ball, and even the researchers themselves make it clear that crypto remains highly volatile. But what makes this important is that they're pointing to actual network activity rather than speculation. To better understand the findings, the paper was summarized using AI, and the conclusion was surprisingly optimistic. The summary explained that XRP's transaction network may act as an early warning system. When certain structural changes begin appearing inside the network, the probability of a major price surge increases significantly compared to normal conditions. Think about that for a moment. Most investors spend their time watching price charts, but according to this research, the real clues might appear on the XRP ledger before those price charts ever react. And that's exactly why many analysts continue paying close attention to on-chain activity. Because by the time everyone sees a move on the chart, the underlying network activity may have already been building for days or even weeks. The researchers specifically noted that monitoring these structural shifts could potentially give investors better timing and more confidence than relying on price action alone. Again, no guarantees. But it introduces an entirely different way of thinking about XRP. Instead of asking, what is the price doing today, the question becomes, what is the network doing today? And that brings us to another interesting observation. When looking at XRP Ledger transaction activity over recent months, there have been periods where transaction volumes increased significantly. Some months showed noticeable spikes in network activity while others cooled off. On the surface, that might not sound important, but when researchers are suggesting that transaction behavior may precede major price movements, suddenly those spikes become a lot more interesting. And then there's one particular example that really stood out. Looking back at transaction data from late 2025, something unusual happened just before a major market decline. Several days before the broader crypto market experienced a sharp correction, XRP transaction activity dropped dramatically. The network activity didn't gradually decline, it fell off a cliff. Then, shortly afterward, the market itself experienced a major sell-off. Now, one example doesn't prove a theory, but it does raise an important question. If transaction activity can weaken before major downturns, could rising transaction activity potentially provide clues before major rallies as well? That's exactly the possibility these researchers are exploring. And for traders, analysts, and long-term investors alike, that's a fascinating concept. Because if network behavior consistently provides signals ahead of price action, it could become one of the most valuable metrics to watch going forward. And here's why many XRP supporters think this conversation matters even more today than it did in the past. Because the environment surrounding XRP is changing rapidly. We're seeing increasing discussions around regulatory clarity. We're seeing institutions preparing blockchain strategies, and we're seeing infrastructure being built across the digital asset industry at a pace that continues to accelerate. So if transaction activity truly matters, what happens when significantly more participants begin interacting with the XRP ledger? What happens when larger institutions enter the market? What happens when regulatory barriers become easier to navigate? Those are the questions many investors are asking right now. And according to some analysts, the answer could come much sooner than most people expect. And that brings us to what many investors are watching even more closely right now: regulatory clarity. Because even the strongest technology can only go so far if institutions don't have clear rules to follow. And that's why the Clarity Act continues to be one of the biggest topics in the digital asset industry. According to supporters of the legislation, The goal isn't to remove regulation. It's actually the opposite. The goal is to create clear rules for digital assets, establish consumer protections, and give financial institutions confidence to participate without worrying that the rules might suddenly change overnight. And that's important because many large institutions are still sitting on the sidelines waiting for certainty. Think about it. If you're managing billions of dollars, you're probably not going to build major digital asset products if there's a chance regulators could completely change their position a few years later. That's exactly why many analysts believe regulatory clarity could become a major catalyst for the entire crypto industry. Not because it creates demand overnight, but because it removes uncertainty. And when uncertainty disappears, participation tends to increase. Now, another discussion that continues to gain attention involves stablecoins and digital payments. Some industry leaders argue that stablecoins represent the future of digital transactions, while others continue raising concerns about privacy and oversight. Regardless of which side of that debate someone falls on, one thing is becoming increasingly clear. The financial system is moving toward greater digitization. Governments, banks, fintech companies, payment providers, and blockchain networks are all preparing for a future where digital assets play a much larger role than they do today. And that's one reason why XRP supporters remain focused on utility. Because while headlines often focus on short-term price action, many long-term holders are paying attention to the infrastructure being built behind the scenes. They're watching payment systems, they're watching tokenization, they're watching institutional adoption, and they're watching the XRP Ledger continue to evolve. There's also another point that often gets overlooked. Today, regulatory uncertainty remains one of the biggest obstacles facing the industry. But once clear rules are established, companies can finally focus less on legal questions and more on building products, attracting customers, and expanding adoption. That's why many investors believe the next phase of crypto growth could look very different from previous cycles. Instead of being driven purely by speculation, it could increasingly be driven by real-world utility and institutional participation. And if that happens, transaction activity on networks like the XRP Ledger could become even more important to watch. Because if this research paper is pointing in the right direction, network activity may provide some of the earliest signals that something bigger is beginning to unfold. Which brings us back to the main takeaway from today's discussion. Most investors spend their time watching price charts. But this research suggests that the XRP Ledger itself may be telling a story long before those charts fully reflect it. Whether it's transaction activity increasing before major rallies or declining before significant pullbacks, the network could be providing valuable clues about what's happening beneath the surface. Of course, no model is perfect. No research paper can predict the future with certainty, and no single indicator should ever be used in isolation. But when academic research, growing institutional interest, increasing regulatory momentum, and expanding blockchain infrastructure all begin moving in the same direction, it's definitely something worth paying attention to. Because as we've seen many times before in crypto, the biggest moves often happen when the majority of people aren't looking. And if the next major XRP move is eventually driven by network activity, institutional participation, and regulatory clarity all coming together at the same time, it could happen much faster than many investors expect. For now, we'll continue watching the data, following the developments, and tracking the signals that matter most. And as always, we'll keep you updated every step of the way here on XRP Update. Thanks for watching, and we'll see you in the next update.